Hey everyone, I'm Charting Man Dan of the Chart Guys. In this video, we're going to look at the charts of the major sectors and indices as we get ready for the FOMC this Wednesday, which is sure to shake things up in the short term. NVDA bulls put on a show today. Let's see where we stand.
So let's start it off with SPY and QQQ. Later in the video, I'll talk about a mistake I made choosing the wrong name to short this afternoon. But we can see that SPY has the highest level we've seen in 8 months, bull break. But it's important to be keeping an eye on the futures charts as well, because we can see although SPY broke 416.72 today, which again, highest level in 8 months, certainly notable. If you look at ES, which is our futures chart, you can see that we broke the high of the past couple of weeks, but we did not break the high of February. And that is a double top right now. And the reaction, considering we hit that level and then closed at the low of the day, is definitely worth paying attention to because it is still acting as resistance. So with where we stand right now, we had a big time bull move off the low of Wednesday, and we've got a lot of space for a daily higher low to be the result of this consolidation. As I mentioned, the FOMC on Wednesday is going to be a significant factor in the short term. I care more about Thursday and Friday than I do Wednesday, the last 2 hours of trading, because that's a very small window versus significant time Thursday and Friday for capital to move around. And we know that the bears have a bit of pressure on them because the bulls are keeping control and hitting these highest levels. And anytime I see a resistance level break and get to the highest level in X months, I just imagine there's another little wave of shorts that are being forced to cover. So at this point, if the bears are going to prove anything to us, we need to break the low of today, tomorrow, and bears want to see a retracement on the daily time frame of over 50%, meaning bears need to see a pullback. In this instance on SPY, it would be 410.70, essentially giving back more than half of the bull move that we saw from Wednesday into today. So anything less than that, and the bulls are just fine on that consolidation. And with where we stand, we know it's the bears that need help from the FOMC reaction. Bulls don't need any help. They're at 8-month highs. Bears need help. QQQ, highest level in 8 months. Checking in on the NASDAQ, or I should say the futures. Is that the case? Well, we've got the high here, and we can see, yeah, we broke above it, but again, not really convincing, still acting as resistance. So if we break the low of today, tomorrow on QQQ, same deal. How much retracement do we see? Do we set a daily high or low quickly? Do we drop enough to get to hourly oversold conditions? Again, we've only got 1.5 trading days before the FOMC, so can't imagine we're going to drop too significantly. But the weekly bull flags have confirmed, and the FOMC is either going to see them follow through and put some more pain on the bears, or it's going to be a fake out if it's a bearish reaction, and then we'll have to consider the potential for monthly consolidation shaping up. Semiconductors, big bounce the last few days. The semiconductors have been weaker than the NASDAQ for the majority of April, and they're now stronger the last 3 days. The relative weakness is shifting into relative strength. So the weekly bounce is underway for SMH, and I'm keeping an eye out for the potential of a weekly head and shoulders, but we don't have much confidence in this weekly bounce until the bulls confirm a daily uptrend. We know a weekly higher low being set without a daily uptrend is less trustworthy than a weekly higher low being set with a daily uptrend. So keeping an eye out for a temporary top, watching the hourly uptrend as a guide, and when we lose the hourly uptrend, it's the first indication that daily consolidation is underway for the semiconductors. And again, NVDA is just leaps and bounds ahead of anything else in the sector for strength. We just traded sideways for a month, and then a big bull volume break, putting a bunch of shorts underwater. And, over the past couple of weeks, I've just been seeing a lot of people on social media talking about how overvalued NVDA is in terms of market cap and, pointing to the fundamental reasons why it's overvalued. And maybe that's the case, but doesn't mean we can't go higher. So just keep that in mind. I had a dream over the weekend, a nightmare, that I was shorting NVDA while hanging with friends, and it was up $10, and I couldn't, on my phone set the stop, and I was averaging down, and it was just a bad situation. So unfortunately, that happened to somebody today, but it wasn't me. Hourly uptrend is our guide. Tons of space for the higher low, and we're looking up towards 300 psychological from here. We broke 289.19 today, and yeah, 300 psychological. weekly higher lows the whole way up and haven't even touched EMA 12 the last couple of months. It's just a really strong lead bull. When it's time for significant consolidation, it will turn into a lead bear. And it just hasn't done that, aside from, maybe a day or two at a time. Healthcare, big bounce. It was a lead bull sector today. We know anything under 135.26 is just a daily lower high. Bears are really hoping that the bulls lose the hourly uptrend tomorrow to shape up a daily lower high. Because again, most sectors right now are weekly bull flags, unless we break the lows of consolidation, unless bears prove to us they are not. SPY and QQQ just confirmed the weekly bull flags. XLV is a potential weekly bull flag. XLF is a potential weekly bull flag. Still struggling at the EMA 12 resistance though. So we had FRC bought out by JPM, and JPM gapped up because they got a good deal. And we saw XLF with morning strength, but giving some of that back, we pulled back under the high 33.53 by 10 pennies. And the question is, are we going to see daily consolidation to scout a higher low on a pullback if we break the low of today tomorrow? Still keeping an eye on KRE. Again, I do think that regional banks are going to be a good long-term buy eventually, but I have no idea if we're done hearing about regional banks collapsing. And as long as we're in a daily downtrend, we don't have any confidence that a bottom is being set. But we know that the maximum fear environments are the time to scout long-term bottoms. Remember when Tesla couldn't get any more bearish and then bounced 100%? Remember when Meta couldn't get any more bearish and then bounced 200%? So we look for things to be as bearish as possible. You don't want something to be fundamentally broken, but when the narrative is as bearish as possible, start keeping an eye on the other direction. Doesn't mean just scale in, an average down and hope to nail the bottom. It means watch for a longer term bottom to take place, watch for a longer term shift to take place. And so that's where I stand this summer in the regional banks, keeping an eye out for this wave of fear to lead to a longer term bottom eventually. Not yet. IWM is still weaker. So we haven't had a daily uptrend in IWM in over a month. Anything under 178.45 is just a daily lower high. We could see the upper wick here. So IWM bulls need help. So I just said, the bears need help on SPY and QQQ from the FOMC, but IWM has been struggling at weekly EMA 12 resistance for a month, and these bulls need help to try and confirm a weekly uptrend. And it's been growth names. The financial sector to a certain degree has been weighing on IWM, but growth names as well, not doing a whole lot. And that's really the weakest spot in the market still, aside from, regional banks and cannabis. But cannabis is growth. It's these growth names that ran up massively. I mean, NIO, thousands of percent up, and then you get back 80% plus, and there's just been no conviction, no convincing bottom here. We know the broader market, like I said, SPY hitting 8-month highs. If we were hitting 8-month highs in NIO, we would be trading over 100% higher. And we'd be up here. And that's not the case. And there's a lot of growth names where that is the case. Just weaker. Snow, sideways, and tight. Worth keeping an eye for a long-term bottom to try and form, but that's only if the broader market keeps marching higher. And then we watch for these names to be laggards. PLTR, same deal. Trying to find a longer-term bottom, but still not doing a whole lot big picture, trying to form a long-term bottom. Bulls have a lot of proving to do in growth, and that's why ARKK still in a partial swing short here. But that's why ARKK has been struggling so much. It broke out massively, it pulled back massively, and it is not setting a convincing longer-term bottom at this point. We would need to hold 29.43 and break 45.46 to have the first monthly uptrend in a very long time. Biotech sector, this is the ideal laggard bull. It's happened twice now. It was a laggard bull here to the broader market strength, and then it was a laggard bull on Thursday, or I should say on Friday and today. Because you look at SPY, what was SPY doing Wednesday, or SPY closed week Wednesday? This was Thursday. And XBI did not participate on Thursday at all. And it participated Friday and today as a laggard. So the biotech sector, which I lump in with growth, is doing what bulls want to see as laggards, but it's really only the biotech sector and not any of these other names at the moment. But 8280 is in play, rejected today, but bulls trying to confirm a quick little weekly bull flag. An hourly uptrend is our guide. Anything above the low of today will be an hourly higher low. Lots of names have hourly uptrends as our guides right now. Lose them, and we zoom out and scout for daily consolidation. Keep them, and it's all bulls. Tesla, I forgot to check in on Tesla. So Tesla's a daily inside bar. We know a daily lower high is the most likely result of this bounce. We can't forget that. The bulls need another leg up if we're going to create the space for a daily trend change to eventually take place. So if the inside bar breaks bull, the bounce isn't done yet. But if the inside bar breaks bear, our new lower high is set at 165, and we're looking back at the recent low in the 152s. I am looking for a Tesla monthly high or low longer term, but we have to confirm a daily uptrend as the first baby step towards that monthly high or low being set. So if we don't have a daily uptrend, not even thinking about a monthly high or low. Riot, the crypto names were very bearish today. From the get-go, pre-market, they had relative weakness because Bitcoin's had a bit of weakness over the weekend, Sunday night into today. But Riot daily lower high is set, and if the bears break 10.06, we confirm the first daily downtrend. And we haven't had a confirmed daily downtrend in a long time. I mean, certainly since this big bull move took place. And MARA is the same. Daily lower high set, and a break of 856 would confirm the daily downtrend. And that would be a notable shift taking place. Coin has been the lead bear for quite some time. Coin just hit the lowest prices. Again, it's another growth name, but hitting the lowest levels that we've seen all year almost. 4.5 month lows. So definitely a lot of weakness continuing. And again, just a monthly lower high. We would have to hold 31.55 and break 87s for a longer term momentum shift. Otherwise, the monthly downtrend continues. So my mistake today was looking at lead bears on the morning, and the lead bears this morning were Amazon, Netflix, crypto names. That's who was standing out to me. And so I was looking to short on the bounce after the midday bounce. And so I'm looking at Netflix and saying, all right, stair step drop on the 15-minute in free fall. Nice volume climax marked that low. And then a stair step bounce. And I was trying to short it too early. I think I was back here. Just a little, top fish attempt and then stopping out. But my mistake was Netflix held daily support. So the relative weakness shifted once daily support held. Why would that happen? Just think about it psychologically. If I'm a trader and I'm short and we hold a daily support level, I cover some position. If I'm a bull looking for a bounce, I'm playing off that support. And if it holds, I'm in a long position. So the balance between supply and demand of shares shifts when you have a key level that market participants are playing off of. And so my mistake was trying to short after the daily support held, where bulls then ended up getting more bounce follow through, versus trying to short one of these crypto names that is setting a daily lower high. So the bears had favor on the daily time frame as far as we just set the daily lower high and we're pulling back now, versus Netflix, which had just held a key support. So that was my mistake. But looking in hindsight, MARA, best opportunity to short today was this bounce midday. 2-minute RSI gets overbought. We double top by a penny, and then that's it. We roll over for another 6% drop. So that was the better trade to make. And I was looking for that short at the same point in time. I think pretty much here is where I was entering Netflix afternoon, whereas MARA, a little bit later would have been the ideal time. And Riot, same thing, 2-minute overbought. Backburner. 2-minute overbought, looking for the longer term lower high, and then rolled over into the close. The dollar is close to confirming the first daily uptrend in 5 weeks. Again, we got our double bottom down here, 178, 182. And if we confirm the bull break of 102.23, it's then a convincing hold. Obviously, the FOMC reaction is going to determine whether we bounce significantly off this level or whether, this daily trend change can happen tomorrow and we know not to trust it unless it follows through post FOMC, because it could very easily be a daily trend change confirming into a bearish reaction. And I am watching for this to potentially be a cup and handle, an inverse cup and handle like pattern. If we confirm a daily uptrend with zero follow through. But the metal bulls had a break today and then gave it all back. So metal bulls tried to break out. Silver did a much better job, but gave it all back. So weekly bull flag tried to confirm and we failed. And so if the bears are that's the bears playing defense. And if they're gonna go on offense, they've got to break 24.49. And gold bears want to break 19.69 if we're going to decrease the probability of a weekly bull flag. But again, FOMC is going to determine the reaction Wednesday into Thursday is going to determine whether these are weekly bull flags on the metals or not. Oil, trying to shape up a 12-hour trend change. Simple statement, bulls must get over 76.92 for the first indication that a weekly higher low is shaping up. We know a weekly higher low is the most likely scenario. We know the energy sector has relative strength. Look at the retracement. One way to determine relative strength or not is retracement. XLE, how much have we consolidated? 382 on the weekly, 382 retracement. You go to oil, how much have we consolidated? 50% retracement. So we could say the energy sector stocks are holding on better than oil itself. Both are looking for weekly higher lows. Oil bulls have more proving to do. Natural gas still choppy as ever. We had news on Friday of a explosion in the US pipeline, and we shot up, mini short squeeze, and then dropped and gave it all back. And it reminds me why I don't trade natural gas, this chart. We had a bear break straight into a bull break, zero follow through on either. The most clear time frame is the weekly. It's a clear downtrend. Topped out, lower high, lower high, lower high. Anything under 301 on this current weekly bounce is just another lower high. And we have to see a confirmed weekly uptrend for a longer term bottom to be set. Go back and look at any bear market in natural gas, and you will find a weekly uptrend confirming as part of a trigger for that shift. Weekly uptrend. So I have a lack of clarity on the short-term time frames for natural gas. There's a lot of clarity on the weekly chart. And just a question of, is the weekly lower high shaping up right now or not? All right, that's where we stand heading into tomorrow. Bears are going to try and shape up daily consolidation. We will look for daily higher lows, keeping in mind the FOMC is going to dictate a lot this week. Broader market bears need some help in their favor. Right now, the market is looking for, I think last I checked, it was 80% chance of a 25 basis point hike. And we'll be looking at the forward-looking language. Is the Fed going to pause for the rest of the year? Where do we go from here? Appreciate you watching. Thanks for the likes and the shares. Do good things, and we'll see you tomorrow.
Some more nature and trading analogies. So I've got my greenhouse here, and it gets really hot in the summer. And so I don't know if it's going to be too hot. So I am diversifying the kinds of plants that I'm putting in here, mostly nightshades because they like it hot, but tomatoes and eggplant and basil and peppers, and going to see which ones do well, which ones don't do well with this excessive heat. And just like when we have changing market environments, we have different styles of trading, different edges that are going to work better or worse in different environments. So whether back burner bounces are going to be working well, or whether I should be shorting lower highs or scouting equilibriums, have to try out a number of different styles and strategies when we are clearly in different market environments than what we've been used to over the prior year or 6 months or however long it's been. Another example. So here we've got dead figs, dead eucalyptus, and that's because over the winter we had a few nights where it dropped down into a very unusually low single digits. Overall, it was a warm winter aside from really 3 nights. And talking with a bunch of people in a local Facebook group, everybody lost a bunch of perennials. and it is the non-natives that are dying. This is a service berry, and it is thriving. And so it's the non-natives that are dying, and it is the plants that are not used to this kind of environment, didn't, you know, originate and adapt here. So essentially, I can be a really good trader in a certain market. Let's say I'm a really good trader in crypto or in stocks, and you move me over into forex or into futures, and it can take some time, and eventually, you know, I can use my skill set to become a sufficient trader. But at the get-go, it's going to take some adjusting, and potentially it could have harmful impacts. So we have to recognize the markets that we are best suited for trading, and when we are not in those markets or in a different environment, we need to be a bit more protective and cautious and be patient with ourselves until it takes the time required to adjust.